This is Fintech Insider News. This week, Plaid announces they will pay JPMorgan for customer data. We hear from Thunes about their latest real-time payments launch in the Middle East. And it's Pensions Awareness Week. We take a look at the startup that's accelerating the market. We'll be discussing all of this and more on today's news show, so don't go anywhere.
This episode of Fintech Insider is brought to you by Fireblocks, the stablecoin infrastructure platform trusted by top global businesses such as Visa, BNP Paribas, Revolut, and more. Fireblocks powers over $100 billion in monthly stablecoin volume, helping PSPs, fintechs, remitters, and banks issue, move, and manage stablecoins, all securely and with built-in compliance. Get complete control to build your stablecoin strategy, manage liquidity, and on-off ramp in over 60 currencies, all at scale. Learn more at fireblocks.com.
This episode is brought to you by LinkedIn. Healthcare professionals can lead their careers with LinkedIn. Discover jobs by specialty, preferred shifts, and even desired salary. From mental health therapists to radiology technicians, it's now faster and easier for healthcare professionals to find the right fit. Learn more at linkedin.com/healthcare. Side effects may include faster job placement, improved work-life balance, and increased career satisfaction.
Hello and welcome to episode 999, drumroll please, of Fintech Insider, brought to you by 11FS, the 5-time consultancy of the year that works with banks, investment firms, digital banks and fintechs to build the next generation of financial services. We have a very special episode coming for you next week to celebrate 1,000 episodes of Fintech Insider, so keep your eyes and ears peeled for that, fintech fans. I'm Kate Moody, Strategy Director here at 11FS, and this week I've been chatting to all sorts of exciting people about cool stuff around the world that they want to build, from the UK to parts of Eastern Europe. It's exciting times, as always, in the world of fintech. It's a big week of firsts in the fintech world as well, as Money 2020 touches down in the Middle East for its debut conference in the region. For those of you that couldn't make it to the event, don't worry, we've got you covered. We'll be bringing you all the Middle Eastern fintech flavour straight from Saudi Arabia's first ever Money 2020. Consider this your insider scoop from another exciting chapter in the world of fintech. And who better to break down the biggest stories of the week than our expert panel? Let's meet them. First up, a very warm Fintech Insider welcome to Ahmad Yaacoub, VP MENA and Country Head for Saudi Arabia at Thunes. Massive welcome to the show, Ahmad. Have you been to Money 2020 in Saudi?
Thank you so much, Kate. We've been, Thunes already have an office in Saudi, and we've been in the market for 3.5 years. It's an amazing market, honestly. And by default, we did attend Money 2020, okay? We had a booth there, okay? And we spent the whole 3 days in Money 2020. It's such an amazing event, and it's such an amazing moment to see this event happening in Middle East and in Saudi Arabia for the first time. I mean, if you look around, we had more than 450 brands, up to 45,000 visitors over 3 days. More than 600 plus global and local investors attended. So the event overall was amazing. The vibe was really cool. It was so cool to see all of those fintech companies all gathered under the same roof, global and local companies. So, for example, we had Visa, where they had an amazing booth, okay? MasterCard, the same, checkout with their garden. They had an amazing garden, and especially as well in Thunes. So in Thunes, we had such an amazing booth there. We welcomed all our partners at the booth, and we had an amazing conversations with all of them. So, a lot happened at that day, a lot of announcement. On top of them, we did announce our partnership with one of the key players in the market, which is an e-wallet called Bark. It's considered as the fastest growing e-wallet in Saudi. So we announced our partnership with them. As well, we had another proud moment with another Saudi customer, which one of the top 5 banks in Saudi. It's called Al Inma Bank. So, and aside from our celebrations and our proud moments as well, we witnessed that a lot of companies had the same, and they saved this big moment, whether it's a global or local, to celebrate this in Saudi. And if this reflects one thing, it reflects on how Saudi is shaping the global market and becoming a fintech hub. So yeah, overall, it was really amazing to attend the event, and definitely we're going to do it every year.
Oh, I mean, I'm not going to lie, that's absolutely not helped my FOMO that I've been experiencing all this week, seeing like all the stuff that's been coming out of it. But as I said in the intro, there's going to be loads of stuff coming from the team out there as well. So, and I'm just going to have to work harder to wrangle myself an invite for the next one. So, but yeah, lovely to have you on the show, and really looking forward to getting your insights as we go through the news this week. So thank you for joining us. Next up, we have a Fintech Insider debut for May Limps, Group CFO and Managing Partner at Anthemis and CommonAI Board Director. Again, massive welcome, May. Thank you so much for joining us. We'll be hearing more about an exciting new launch from Anthemis shortly. But yeah, please introduce yourself to our listeners.
Hey, Kate. Lovely to be here. Super excited to make my debut, and super pumped that it's episode 999, the penultimate episode before you hit 1000. A little bit about Anthemis. Anthemis, we're an early stage VC investor. We've been investing for about 15 years. We have a global footprint, investing across the UK, Europe, as well as the US. And it was really built upon the singular mission to create a more accessible, transparent, and fair and digital economy. And we've been doing that, investing in many category-creating companies like eToro. Really excited that it recently listed, as well as other companies that we're really proud of, like Currency Cloud, Betterment, and Tide in the UK. So Kate, super excited to be here, and lovely to meet everyone else on the panel today.
Yeah, likewise. Thank you very much. And yeah, absolutely looking forward to picking your brain as we go through as well. And last, but definitely not least, it's a warm welcome back to the show for Dave Morris, CEO at FoundryOS. Always nice to hang out, Dave. What have you been up to recently? Tell listeners a bit more about you.
Yeah, it's very busy time at FoundryOS. FoundryOS is the sort of banking and wealth platform that was spun up out of the sort of 11FS world and from all of the things that were done in the past. So we're a standalone business on our own now, out of the main stable. So been a lot going on this year. We've got our first customers signed up. Got a lot of announcements about other customers coming over the next few months. And sort of very heads down on trying to get that first customer live at the end of the year. So a lot going on in our world.
Awesome. Well, yeah, thank you for taking the time out to join us, and looking forward to picking your brain as well. So we have a panel. Now let's get into the news. And our first story is taken from FinExtra, but covered in lots of places, and that is Plaid to pay JPMorgan for access to customer data. JPMorgan is imposing charges on data aggregators like Plaid for access to its customers' financial data, citing a strain from large numbers of unnecessary data requests. They said unnecessary, not me. We'll discuss that. In June, JPMorgan recorded 1.89 billion data requests from middlemen. Only 13% were transaction requests initiated by customers. Within those requests from Plaid specifically, just 6% of their API calls were customer-initiated transactions. The new deal between Plaid and JPMorgan ensures that Plaid retains access to the customer data but will now pay fees. The exact cost has not been disclosed. Pricing will vary depending on use case. Fintechs in the payments sector are likely to face higher fees. We covered this back in June when JPMorgan announced they would start charging fintechs. Here's Jason Mikula from Fintech Business Weekly commenting on the story.
As far as the specific move, I'm not sure that I agree that the move from Chase here is actually about generating revenue from the data, so much as I think is about using Chase's mammoth market power to undermine potential competitive threats, particularly, as you alluded to, in payments-related businesses. In the U.S. case, pay by bank. Sources that I've spoken to who have seen the proposed pricing described it as quote-unquote punitive and literally an effort to kill off an entire industry. So it isn't just about cost recovery. It's about pricing this open banking data in a way that may make competing with Chase or offering products or solutions that compete with Chase just unviable given the economics.
Dave, come to you first. Given, I suppose, that comment from Jason and kind of what we've seen play out with this announcement from Plaid and JP, what's your take on this? Are they successfully diminishing the competition?
Well, I'm very much with Jason. I think a lot of this is about trying to kill the market. For JP, they want the entire ecosystem in their world. They want people to be doing everything on the Chase world and other parts of their ecosystem. And so, for them, open banking hurts them. This is, for me, is totally against the open banking approach and what things should be there. The idea to call this unnecessary as a set of the way this is happening, and it feels very punitive, and it does feel, the big boys trying to kick the fintech world and stop this happening. I don't think there's much that can be done to stop this. Plaid clearly have rolled over and accepted that they're going to have to pay for this. I suspect other people will end up doing that as well. But, this isn't a good news story from my perspective. I think for JP, they're big enough to not care. But, this is not a good thing. And, they're trying to hide behind this is how people are using the technology, and they're using it wrong, and it costs us a lot to do it. But how they could even know what's customer initiated from an open banking approach, I couldn't even tell you. So don't like this, don't like it at all.
Yeah, I mean, Ahmad, I suppose I wanted to get your perspective as well. What was your reaction to some of those stats around these API calls? Does that sound like that could be correct? So just 13% of API calls being customer initiated. What's going on here?
So honestly, I'm with Dave. I don't think this is a good move. But if I want to think from the other side, I think like if you look to JPMorgan, where they have reported a very large volume of API data requests. Many of those is coming from aggregators than directly from customers. Okay, which is by default imposes a load. A cost. Load is a cost, okay, on JPMorgan, and maybe they wanna just pass the cost, okay, to the aggregators. They just don't want to bear this cost, okay. And another key thing that might be why they did it. Decided I think I agree with Dave. I don't think it's a good move, but as well maybe it was the risk of losing control, maybe, okay, where banks are increasingly pushing back against free access by third party or by aggregators to customer data, okay, which is specifically third party data that has maintenance, security, compliance, and sometimes infrastructure cost. And if you look at the cost of protecting this data, whether it's an infrastructure cost, it's a maintenance, the security they are paying to protect this data. Okay, so maybe they thought, okay, wow, this is the time to start passing part of this cost. Okay, although they need to pay the cost, they are paying the cost whether they are availing this data to Plaid and other players or not. The cost is still there. Okay, but I don't know why now they agreed that okay, it's the time now to pass this cost, because I think we are moving toward how important this kind of data is becoming more and more. Okay, so maybe they think like, okay, it's the time to start pushing people that's using this data or benefiting from this data to share the cost with us. Okay, but overall, I totally agree with Dave that it's not a good move. Maybe for consumers, they won't feel a difference at this stage, at least, okay? Because you're not gonna, as a consumer, not gonna feel any changes because existing contracts won't change, right? But maybe on longer term, and depending on how fees are set and who's gonna absorb them, okay, now it's Plaid. And as you said, Kate, we don't know how much they cost. It's still not known, okay? So whether Plaid is gonna absorb this cost or they gonna pass it indirectly or directly to the consumer, that's the kind of applications that's keeping me worried, honestly. Okay?
Yeah.
So yeah.
They're not going to hold on to it. They'll pass it on the costs of this for sure.
Yeah, definitely.
In their position, they're not going to. This is just the US, though, isn't it? It's this because obviously this can't happen in the UK and Europe. The mandate in open banking says you've got to. And I think it's a gap in the US open banking regulations, to be honest, that mandate doesn't exist that allows them to get away with this.
Yeah, and there's a lot of ongoing dialogue with the regulators in the US about they've attempted to put various rules in place. They've issued a draft that's been pushed back on, etc. May, I'm keen to bring you in as well. I mean, How do you think this might, obviously Plaid is a huge, well-established, I mean, it feels weird to even call it, it's not a startup anymore, right? They're just a huge established player in this financial services space. But how do you think earlier stage startups who rely on open access to banking data in the US might be impacted?
I think this is a classic sort of David and Goliath kind of story. I know Plaid is almost like an incumbent, but it wasn't always an incumbent. And this practice that we've seen in the US will allow, incumbents like JPM to have a moat across valuable data that prevents earlier stage businesses to be able to access it. And that's anti-competitive. I agree with Dave. That wouldn't happen here in UK or with open banking, but it's difficult to see that trend happening in the US. That's it's not just this trend in data that we're seeing in the US. I think we're seeing that across other things where moats are being created around other valuable aspects or resources, not just data. And I think that's a worrying trend.
Yeah, no, absolutely. I'm also intrigued to see, I would have loved to have been in the room for these negotiations, right? Because obviously JP holds a ton of the cards, but I'm interested to think about it from their perspective as well. Like, it wouldn't necessarily have played out well for JP if suddenly their customers had been logging into all of these Plaid-enabled platforms and found that Plaid turned around and said, I'm sorry, but we can't accept you. You can't log in here because your bank won't connect with us. So I imagine it'll be, obviously, I think Plaid has had to pay for this data, but I suspect they probably had a much stronger position than some of these other smaller players will have when they come to the negotiating table. So it's interesting. I don't know. It's hard to read too much into what Plaid and JP have decided between them because Plaid is at such a scale, but I imagine they had much more right to push back. But yeah, Dave, what do you reckon? Do you think we'll see other, because I struggle to even think who Plaid's main competitors are in the US at that scale, right? But do you think other people will be able to negotiate similar deals with JP?
Yeah, obviously the likes of Tink and people like that are similar play, but they've got the weight of Visa behind them and things like that because that's where they're owned and things like that. So you've got to see it being more negotiation on this. The fact that there's not much sort of consumer noise around this probably is a reflection of the maturity of open banking in the US, to be honest. I think here, obviously you couldn't do it, but if this happened here in a similar way, where the maturity or in Europe, and so many services rely on open banking, that I think there will be a lot more consumer noise about it. I think it's in the US, open banking is still in its infancy in comparison to other regions around the world. The consumer rights there is not at the forefront, and I think particularly in the current US government that big corporates win, and these centralized government regulation is not on the agenda, certainly in the current government over there.
Yeah, I totally agree. And irrespective of what's been agreed, small or big, it sets precedent, which I think is the worrying aspect of it.
Yeah.
And like you said, of Plaid, who by no means, it's definitely not a small fintech anymore, has to agree to these things, then what more for the smaller fintechs who are up and coming?
Yeah. Ahmad, does this make you kind of appreciative of your own sort of local market dynamics in a different way? Or like what's the kind of current setup in the kingdom around open banking data?
No, honestly, we have one of the toughest regulators in the country, in the world. Okay, not in the country. Sorry. So, which it's called SAMA. The central bank is called SAMA. Okay, and as I mentioned, they are one of the toughest regulators in the world, and they will never allow such a thing to happen. They are very customer oriented. Okay, they want to support fintech because it's part of the Vision 2030 that there is a certain number of fintechs need to be there in the market before 2030. And as well, they want to see more neobanks coming to the market, and they want to move away from traditional banks, and they want to attract people like Revolut to come to the market. And they are succeeding so far because Revolut is launching in the market, Remitly is launching in the Saudi market, okay? Neobank, which is one of the largest digital banks in the world, as well is launching in Saudi, okay? So this, I'm pretty very confident or comfortable that this will not happen in Saudi.
Yeah. Okay. Well, I think that's obviously, I think we could probably talk about this story for the entire show, just because the ripples it will send out. But that's probably a good segue for us to move on to our next story. Again, take this one from Finextra, but it can come from multiple places, and that is Thunes expands real-time payments to Saudi Arabia. Using its direct global network, Thunes' members can now send instant payouts directly to bank accounts and wallets in Saudi Arabia, denominated in Saudi Riyals SAR. This move supports Saudi Arabia's broader push under Vision 2030 to modernize its financial sector, improve digital payments, and meet growing demand for speed and transparency in cross-border transfers. The value of money being remitted into the kingdom is expected to hit about US $230 billion in 2025. The expansion strengthens financial inclusion and the transparency of payment flows, aiming to reduce friction and cost in cross-border payments. Ahmad, obviously, probably a bit weird if I didn't come to you first on this one. Thanks for joining us. I mean, can you tell us a bit more about the impact that this launch is going to have in the region?
Yeah, definitely. So let me take a step back first and talk about Saudi market. So Saudi is the second / the third sending market worldwide. So they are going to record somewhere around $50 billion only C2C, which is expats sending money overseas. Okay, no one ever looked to Saudi as a receiving market. Everyone want to take a piece of the cake as a sending market. Okay, but if you look at the story from the other side, if we start by looking at the story from a B2B perspective, what does Saudi best or highest exports? Okay, oil trading, I think that's around 180 billion. Petroleums, okay, that's around another, I think, 30 plus billions. Plastic and plastic articles as well. That's another huge manufacturer that's being exported to outside Saudi. So what does this prove? This proves that Saudi is a very strong B2B market, okay? And there is a need for people outside Saudi that they want to send money to Saudi. Only businesses at this we are talking, okay? The second step, if you look what's the fastest growing trend worldwide, it's gig workers and passive incomes on content creators, okay? And there's plenty of those in Saudi, okay? They are all working with TikTok or working with YouTube, and all of them want to get paid instantly. They want to get paid easily, in a transparent way, and they don't want any delays. They don't want any delays, okay? So by allowing those people to receive money to Saudi Arabia, okay, we allow those social media platforms, okay, or those gig workers platform to send money back to content creators and so on, okay? Instant, transparent, okay, and with a fraction of the cost they used to do it, okay? So it was a need, and there was an urgent need to do that, and we proudly started this. And another side of this, if you look to it, okay, is travel agents, or like an example, I'll give you a small example, booking.com, okay? So, and other travel agencies and other platforms such as Booking, okay, where there is a massive at a certain period of the time in a year, okay, where it comes the Hajj season and the Umrah season, okay? Like literally in Jeddah and in Mecca, you can't find a hotel, okay? And as well, there is an urgent need for platforms to pay the hotels in bulk, okay, in an easy, transparent way and in a fraction of the cost, because no one wanna pay $50 over paying $200 for a content creator, right? And not a content creator or a freelancer wanna wait for 4 or 5 days to get their money, right? And not knowing when the money is gonna be arrived. Okay, so by having this real-time payments to Saudi Arabia. Okay, we solve all this problem. And definitely we align with the Kingdom Vision 2030, because on top of the vision is the speed and digital payment infrastructure. Okay, because by enabling the instant transfer into Saudi bank accounts, wallets, Thunes increases the efficiency of and the digital nature of payments, basically. Okay, it supports the target of reducing the friction in cross-border payments and accelerating the digital payment adoption. Okay, as well, it reduces the reliance on cash or traditional payment methods. Okay, where traditional payment methods are without putting any names or labels, were slow, costly, and not real time. So real time means less dependency on informal or slow channels, and this supports the non-cash goals under the Vision 2030. So yeah, it was a great move, and I think our customers that sending money to Saudi Arabia are very happy by this move, and we're going to continue growing our network.
It's really exciting though. Thank you so much for filling in, I think, some more of the context there. I think there's definitely still a tendency, I know I'm guilty of it myself sometimes, when you hear the word remittances, you just think of very stereotypical images, as you say, of like, a worker goes abroad and sends money back to a family. Actually, in our global economy, there are so many more ways in which money does and has to move across borders. And I think you've really illustrated some really interesting use cases there. May, how excited are you by some of the developments we're seeing in the kingdom? It's just a crazy time for that market, right?
It's crazy. I mean, I think that the depth of the ecosystem, the depth of the initiatives, and the targets that have been outlined to hit by 2030 are really impressive. Really something that I think the rest of the world needs to wake up. Innovation isn't just coming from the US or UK, Europe. The rest of the world has definitely woken up to the fact that there is true innovation and development that's happening where you are in the Middle East. And I think what you've just developed jives and rhymes a lot with a lot of other things that we're seeing as well. Real-time payments, tokenization, all of these things that help to make payments flow more seamlessly with less friction, almost instantaneously, is what we're seeing in and amongst a lot of different areas, particularly around, like creating like systems and records as well, so that these things can happen both efficiently and quickly, but in a way that prevents fraud as well from happening as well.
Yeah, no, absolutely. It's really, really exciting. Dave, how impressed are you by what Thunes is managing to... I mean, obviously it's awkward because Ahmad's here, right? So you basically can't slag him off directly to his face, but how impressed are you? I mean, it's not easy, right, to be an international infrastructure player coming into the kingdom.
Oh, of course. I think this is a massive thing for me. I'm not going to not name drop, and I will be rude about the others. Nobody wants to use Swift anymore. Swift is painful, it's expensive, it's slow as hell, and it's just full of friction, and it doesn't work in the sort of modern economy. And so and it's US. Nobody in the Middle East wants to use Swift at all, and so there's many initiatives like this that are trying to move away. Yes, there are other things that you can do instant. You can use Visa Direct, but again, yes, it's real time, but it's expensive. And so you see all of these things, and actually getting past what people really want to see, which Ahmad, you called out, which is frictionless, real time, and low cost, is what everyone's really wants to see in this remittance world. And it's always a challenge cross border because of the fraud, because of the anti-money laundering aspects of it that will sit there always. But this is stuff you can achieve nowadays. And I think certainly in Saudi and wider in the Middle East, you could easily sit 5 years ago and see it trying to catch up. But actually, I think a lot of what's happening is leading the world in these things now.
Yeah, absolutely. Spoiler alert, we've got another story coming up a little later on about another amazing success story in Saudi. So we're going to move on to our next bit of the show, but we'll be back to talk about Saudi very shortly. So on that note, we're just going to take a quick pause here. We'll be back very soon.
Vitamin Water Zero Sugar has great taste, zero BS, and obviously zero sugar. For those with zero room in their calendar, zero patience for slow walkers, those who get 0 hours of sleep on a Saturday night, have zero filter, zero given, and zero interest in grabbing a plain, boring water. Grab a delicious Vitamin Water Zero Sugar today.
In today's fast-changing digital world, proving your company is trustworthy isn't just important for growth, it's essential. And that's why Vanta is here. Vanta helps companies of all sizes get compliant fast and stay that way with industry-leading AI, automation, and continuous monitoring. So whether you're a startup tackling your first SOC 2 or ISO 27001 or an enterprise manager vendor risk, Vanta's trust management platform makes it quicker, easier, and more scalable. Vanta also helps you complete security questionnaires up to 5 times faster so you can win bigger deals sooner. The results? According to a recent IDC study, Vanta customers slash over $500,000 a year in costs and are 3 times more productive. Establishing trust isn't optional. Vanta makes it automatic. Visit vanta.com/insider to sign up for a free demo today. That's vanta.com/insider.
Before we get back to the news, we've got a quick favour to ask. Fintech Insider is about to hit a huge milestone, our 1,000th episode dropping this Thursday. To celebrate, we'd love to hear from you. What's been your favourite Fintech Insider moment so far? You can share it with us by emailing podcast@learnfirst.com or by using the link in the show notes. And now, back to the news. Okay, our next story is taken from Fintech Finance News, and that is Anthemis and Cambridge AI venture partners launch CommonAI, a strategic collaboration to supercharge the UK and European AI market. Anthemis and Cambridge AI venture partners, CAIVP, it's quite a long acronym, have launched CommonAI, a first-of-its-kind engineering computing platform paired with a dedicated investment fund. The initiative is designed to transform the AI landscape in the UK and Europe, removing common bottlenecks in AI for early-stage startups and enterprises, access to compute, IP, and technical expertise. The initiative combines a non-profit engineering organisation, CommonAI CIC, developing shared AI intellectual property, CommonAI Compute Limited, providing affordable GPU compute access, as well as access to a digital commons repository of foundational AI resources. For fintech companies, this means lower barriers to innovation and faster deployment of AI solutions, including in regulated sectors such as financial services. May, I'm going to come to you first. I mean, full disclosure, I'm absolutely not as expert in AI as I definitely should be. There were quite a lot of things in that intro that I'm not sure I fully understood. For our listeners maybe who are not AI experts, can you talk us through, what is the real thing driving this? What is it you're hoping to accomplish? It sounds very exciting.
Yeah, it is really exciting. Something that we've been working on in stealth mode. Really excited that we've announced it. And AI is super topical at the moment in the context, especially of what's been going on this week with Trump coming to the UK. So, I mean, to your question, what's the thinking behind this? Let's take a step back and think about where the UK and Europe is. So the big picture is that, the US is outspending everybody in AI. It's absolutely unbelievable, the amount of resources, capital, talent, infrastructure that they have. And it just doesn't appear sustainable or that anyone else can kind of catch up with them. On the other hand, with China, they're acting in a very coordinated way. They're very coordinated in and amongst the system there, but arguably in a less transparent way. So you've basically got, us in the middle, literally, between the US and China. And, really, we, the UK and Europe, need to come up with a viable alternative if we are to compete effectively with them. But most importantly, which is really topical, is how do we then do it and in a way that protects and preserves our technological sovereignty, which is a term that's been bandied about a lot by Peter Cole when he was Secretary of State for DCIT and now is Business and Trade. So essentially, what we've been trying to do is provide a solution to that. And we've built the CommonAI platform, which very much aligns to the UK industrial strategy. And essentially, it's we're doing it in a really collaborative way. So exactly how are we going to do this? As you said at the beginning, you reeled off all of the different names, and I know it does sound quite confusing, but at the heart of this, on the platform, we have 3 different pillars. So the first pillar is the CommonAI CIC. The CIC is a community interest company, which creates shared IP, know-how, but most importantly, brings together an ecosystem of what we call members to the platform. And it's a really broad church of members. We're trying to make this as collaborative and as inclusive as possible. So it's a broad church in the sense that it includes startups, academics, researchers, but also SMEs and large institutions as well. The second pillar is the compute business, CommonAI Compute Co., which is what you referred to at the beginning, which is really just to provide our members affordable access to compute power, which is really at the moment a real scarce resource if you think about NVIDIA chips and data centers. And the third pillar is the investment management partnerships. So we as co-founders, Anthemis, we're partnering with the CommonAI platform to bring, as an investment manager, capital to the AI startups to help fund them at scale. And those 3 parts, we think, working together in tandem in a collaborative and inclusive way, we think will lower the barriers, provide our members with all of the essential toolkit that they need to compete effectively with the big techs. And we kind of think about it as if we provide them with all of the toolkit, these startups can almost act like robo exoskeletons to augment their capability, that they almost become like virtual big techs.
I love the idea of an exoskeleton. Who wouldn't want an exoskeleton? That sounds great. Yeah, I guess I'd love to understand, like, who are kind of the fintechs that you would ideally love to listen to this to and like reach out, like, as in who is it that you think will most benefit from what it is you're building?
Yeah, sure. I mean, it's broader actually than fintech. I know we have the heritage of being fintech investors, but actually, if you think about AI, in my view, is in a sector. It's something that enables different verticals, of which one is fintech. But AI should be the enabler for other sectors, be it healthcare, be it energy, defense or dual use. So this platform should appeal to all startups operating within those verticals. And it should be about enabling them in the most efficient way.
Yeah, no, absolutely. Ahmad, keen to get your perspective. How interesting is it to see an investor, and like an AI platform teaming up in this way?
Well, I think this matters for if I wanna go back to my point, which is basically if we look at startups, okay. So basically this matters because for startups it's reducing the cost and the friction. If you look at it, compute resources such as cloud infrastructure, GPUs, okay, they are expensive and accessing them reliably can be a barrier for early AI startups, okay. So shared infrastructures helps to reduce capital and operational costs, okay. If you look at it from another perspective, which is the time factor, and everyone want to reduce the time to go to market, right? So it's a faster time to market because what you have shared resourcing, you have engineering help, monitoring, the time between the ideation and the prototype deployment, it helps to shrink, right? So less duplications of effort. Startup teams do not have to build a generic infrastructure, so it's allowing focus more and more in domain and in specific innovations. So yeah, I think it's great to see this happening.
Dave, obviously you're in a, could you describe FoundryOS as a startup? I don't know, but you are in a sort of in build mode, right? So can you sort of see how this sort of offering could help?
Oh, absolutely, and particularly in the fintech space, because one of the big challenges is, you look at what the big tech providers, the cloud providers, are offering from an AI perspective. It's very generic and it's very open, which is very difficult in a regulated space. You have to be very private about your data. You have to be taking the very expensive offerings to be able to lock your world away. That just isn't affordable to the startups. It's okay if you're a massive bank and you can build your own data center and your own compute and those things. Trying to do that in the cloud is really expensive, really hard. And I think it's a barrier to a lot of regulated startups to actually really innovate in AI because of the limitations of what the big tech providers are giving. And you can't start with the easy, cheap options in there if it's regulated data and it's customer data and in the requirements of what comes from people like the FCA. So things like this, I think, as initiatives will really help. I know it's broad, and for me, AI is utility now. It's there for everyone and every industry, but for particularly in the financial services space, I think this is quite an important big win for particularly startup stage people to be able to innovate and do some really different things, and much as we. At FoundryOS, we rely on the big tech providers for our cloud infrastructure and things like that. But you don't want to be locking everything into that world and actually having options to take best of breed. We're 11FS. We've always talked about using schools of fish from a technology perspective to take the best of breed capability rather than big whales. And I think at the moment, some of the tech, particularly in the AI space, you're looking at big whales for these things, and it just doesn't help you innovate. But this is great.
Thank you both.
I know one of the other kind of key components of what you're doing is obviously there's a sort of dedicated fund for sort of high assurance AI, I suppose. Does that relate to kind of the points that Dave was making around like those greater regulatory requirements? How will that help?
Absolutely. I'm glad Dave raised it because because we've historically been fintech investors, we see how hard it is. It's way harder, I think, for a startup to develop in a regulated environment. And also speaking to, our strategic LPs, who in large part are banks or insurers, taking an AI model and making it compliant from a regulatory perspective is really hard because you have to make sure that what that AI model is generating is accurate, auditable, and explainable, and has very little by way of hallucinations. So the funds that we are going to raise, the high assurance theme, is effectively to address that. And that use case is relevant in financial services, but it can also be relevant for any other regulated industry. And the way that we sort of liken it is, it's fine if an AI model can suggest and buy and send you a shirt that they think you may like, but you don't like, that's fine. But if a medical model diagnoses somebody incorrectly and prescribes the wrong kind of medication or process for medical treatment, then that's a failure, actually. And that's the same for defense, but also for financial services as well. So the High Assurance Fund is really just to find startups that can help address this issue.
Yeah, no, absolutely. It's kind of that difficult paradox, right? Where I think some of the sectors which have the greatest potential, where AI could have the greatest potential impact on customers' lives, like health, financial services, also have the greatest potential downfalls if it's poorly executed. So this sounds critical to getting it right. So yeah, really excited to see what you guys do.
And it's also about AI safety, right? And doing things in an ethical way. The idea is that we also provide transparency around that. And, when we talked about the broad church of members, we also want to be inclusive of regulators and make sure that what we develop is done in a transparent way and we get buy-in from the regulators at the very outset, so we don't foot fault unnecessarily.
I'm a big fan of hallucinations in AI personally, but obviously not in a regulated world. I think there's certainly industries and certainly some of the research that's been done around things like alien thinking and things like that to actually get AI outside of the way we think as humans can add some real value to some of the innovation that we want to do across the world, but certainly not when you're trying to live up to consumer duty and the pricing models that you've given to people through an AI model and things like that. It's certainly not a good thing.
Yeah.
Yes. And I think honestly, some of the potential challenges or things to watch after this, I think number one is, on top of that, is the intellectual property ownership and licensing, right? Like how will assured IP be governed? Who owns it? Who owns the improvements, and what licensing terms applies? Okay, and another thing maybe to watch is how this gonna help between the competition among startups. Like if resources are shared, like definitely there is gonna be a potential for conflicts, like two startups competing in the same niche but using the same shared model or data. And back to Dave's point, I think the control and the governance is one of the key areas that can be a potential channel, and it must be a thing to watch, because who's going to be setting the standards and who maintains this shared compute infrastructures, ensure uptime, security, compliance, and so on, right? Like it's a very interesting area, but I think those are potential challenges and things to watch. Like need to keep an eye on them to make sure that none of these or all these elements, all these points are happening in the right time and as they should happen.
Yeah, it's a great point, Ahmed. And we spend a lot of time thinking about that. And that's why the platform, one of the key pillars, the first pillar, is structured as a CIC, a community interest company. And it's structured in a way that is not for profit. And so the neutral governance structure of it is to benefit the community. So we're not a government, we're not, a for-profit company. The idea is that neutral governance helps to be able to arbitrate between all of the different members on the platform. And the idea is, I think, that we want to share what's non-secret source within the confines of the platform. And the idea is that we level everyone up to a certain point so that we level people up more quickly, more efficiently, using best practice. But the bits that are secret source or the data that's private, that element, which is pretty much, if you think about what these startups are raising for, is really like 20% of what they are spending their money more. So actually this way, if we can invert it and allow them to spend less on the foundational aspects, but devote 80% of what they're raising on what's secret source, then that's going to be a efficient way for everyone to scale up. And the idea is that we're going to time embargo certain aspects of the IP and then release it out beyond that. But we allow the members to be able to use the relevant IP within a time embargoed environment.
Yeah, all of that makes a ton of sense. And I think just, as you say, like some really important and well-intentioned sort of principles there, and just really excited to see how this plays out as you guys roll this out. I'm sure we'll be coming back to kind of maybe hopefully talk through some of the evolutions as this goes through. But okay, I'm going to move us on to our next story. I'm sure we absolutely could talk about AI all show. But our next story comes from Tech Africa, and that is HALA secures $157 million in landmark Series B among largest fintech rounds in the Middle East. HALA, a Saudi fintech focused on embedded financial services for micro, small, and medium-sized enterprises, MSMEs or MSMBs, if you prefer to say businesses, has raised $157 million in a Series B funding round, one of the largest fintech rounds in the Middle East. The round was led by the Rise Fund, TPG, and Sanibel Investments, which is a PIF-owned fund. Funds will be used to strengthen HALA's position in the Saudi market and expand its embedded financial services and lending products aimed at MSMEs and freelancers. HALA currently serves over 142,000 businesses and processes more than $8 billion in annual transactions. HALA's growth is aligned with Saudi Vision 2030, particularly the goal of increasing SMEs' contribution to GDP, supporting economic diversification and digital transformation. Ahmad, again, probably would make most sense to come to you first on this one.
Okay.
That is a chunky piece of money. Are they the next Middle East giant? I mean, there's kind of quite a lot of competition for that crown now, right? But this is pretty big.
Yeah, like what happened? We slept one day, we woke up another day, and with a Saudi fintech in Series B raising $157 million. That's really amazing. And being in this market from 2017, which is, I know HALA and I know the management team, I know all of them since the last 5-6 years. I had a direct interaction with HALA. And I think what they are presenting to the market is amazing, because if we take a step back and look at most of the markets, not only Saudi, who's the most underbanked, who's the most, I would say, neglected type or version of the market is SMEs, right? Because like, if they go to a bank, they are not well treated like huge firms, okay? And so HALA solved this problem. And they've been focusing on serving SMEs, small and medium businesses, which is really amazing. Okay, which is, wow, they are saving more than 142,000 businesses, as you stated, Kate, with more than, I think, $80+ billion of annual transactions. So what they have done, if we take a step back and how HALA started, okay, they started with the raise of all the e-wallets, EMI license, okay, when everyone was competing and wanted to create a customer wallet, okay. They said, you know what, let's differentiate ourselves. Let's create an SME or a B2B wallet, okay. So they created an e-wallet, EMI license, under the Electric Money Institution license, which in Saudi that's the top that's the top license under a bank license directly, one step under the bank license directly, okay. And they created a POS machine for their own. They linked this POS machine with the wallet. You go to a merchant that's using HALA POS, you buy from them, and the money will appear directly on their machine, on the wallet, the SME wallet. So how cool was that, right? Okay. Back to your question, Kate. So could HALA be the next regional fintech giant? Definitely yes. However, I think 3 things that they are focusing on that's going to make them another regional fintech giant, okay? The distribution locked into daily merchant flows, which is the POS, the invoicing, the payouts, payroll, bill pays, etc. Okay, and there is priced working capital lending on top of those flows. Okay, so data advantage underwriting it offers a lot. Okay, and last is, I think, the regulatory and bank partnerships, which is the partnership they are doing with the banks, whether it's their their custodian bank account or other partnerships between them and the banks, okay, which would then allow them to access more funding and do more collections and avail more acceptance real at a scale, okay. So the financing size plus the investor mix suggests to believe that HALA can become the SME operating system in KSA, not only the next regional fintech trend, because they literally reshaping the market in KSA when it comes to how SMEs being served, okay? And I think they're gonna expand regionally. That's 100%. I think that's gonna happen, okay? And if we look on how this raise compares in MENA, okay? So raising $157 million at Series B in MENA region is really exceptional, because most, let's call it 150+ million rounds, have been larger stage, like Tabi, for example. They raised the same amount of money, but at Series E, Okay, so it puts HALA among the top fintech checks, okay, in the region for this year, and signal heavier made growth capital, rotating earlier for the B2B infrastructure. Okay, so yeah, we are so excited to see what's next, how they're gonna use this $150 million to expand into more markets and launch more products inside their ecosystem. And I think that's how they're gonna use the money, because I know, in fact, because of my relationship with HALA, I know, in fact, how they're going to use this money and what's the new products they are launching. I'm not sure
you
if
have to tell us.
I'm
Tell
not
us.
sure.
You can't tease us like that.
Well, that was a fresh news from yesterday's Money 2020. My discussion
Excellent.
with
I love an
with them.
exclusive. Yeah.
Okay, but I'm not sure if I'm allowed to say it, so I'm gonna leave this for them to
Give me
announce.
some clues. I can guess. No, okay. No, it's super exciting. May, how impressed are you by this raise? Like, as Ahmed said, like some pretty phenomenal numbers, especially at Series B, right?
It's really astonishing if you kind of think about what the average Series B is. 157 to a raise is really phenomenal. But like Ahmed, I'm a big fan of the SME market. I think it's massively underserved, underrated, and they are the lifeblood of any economy. So anyone who serves it well is going to turbocharge that country's economy, and it's really great to see that. I see a lot of parallels with that with Tide, one of our most successful investments here in the UK, where they really democratized access. I think for the SMEs, it made it faster and easier to grow your company as an SME. And the way that Tide grew really quickly is as a platform. It allowed it to bolt on lots of different products through partnership rather than developing them in-house. And that allowed it, I think, firstly to develop very quickly, grow itself very quickly, but also to ensure that it was almost like the financial control center for the customer, the SME customer, because it really was like a one-stop shop, right? You could put your deposits there, you could get a loan, you could get insurance, you could do a whole bunch of other things. And we see that the SME market is super exciting. You see Monzo and Revolut and Starling all going into that because they can see, what an amazing sector it is to enter.
Yeah, I think one of the components of this that I was most excited by when I was looking through what HALA currently offer, you can see that they are already, as you say, partnering, and it's exciting. They've got a clearly very well integrated buy now pay later offering with Tomorrow. So we're now obviously another huge success story within KSA. I don't think we've had time to cover it in the news today, but they've also just announced an enormous financing package that they've got with Goldman Sachs, Citi kind of coming in, I think $2.4 billion worth of financing to help them roll out their buy now pay later offerings as well. So it's a super exciting time when we've got not just one Saudi fintech being successful, but sort of giants starting to come together to kind of really have an even greater impact for customers. So Dave, do you share my excitement?
Yeah, definitely. And I think what HALA are doing is not KSA specific. They can take this very broad, and they can really go across not just the region, but out, and there's markets that are massively underserved. Places like Pakistan or into Africa and things like that. That they can repeat what they've done, and I can see why. I would imagine that's where a lot of that money is pointed at. Is want to go out and expand beyond the kingdom and get much broader in what they're doing, because they can repeat this very easily.
Just cough, Ahmad, if you think that's part of the plan.
Look, as well. Look, if you think if you look at SMEs, it makes you question one thing, seeing this huge raise of Series B and how HALA is developing in the market. It makes you just ask one question, are banks failing this segment or startups just faster, right? Personally, I think it's both. Okay, right. Traditional banks optimize for larger ticket. They care for larger ticket, collateralized lending, onboarding, KYCs, and so on. While startups win, how they win, how HALA is winning, embedding financial tools into daily workflows, such as POS invoicing, etc., payouts. Okay, they lower the CAC. Okay, and pricing risk from real cash flow data. Okay, so I think that's a key success factor for HALA. And if you look why investors like this model, and I think one of the key things that they raise this money and investors like this, okay, because number one, it fits with the Vision 2030, which is policy to push digitize SMEs. They want a digital a part from the Vision 2030 is to digitize everything related to SMEs. Okay, because as I said, the part that's still not digital in the market is this part is still related to SMEs. Okay, so they are pushing companies like HALA or HALA, especially HALA. Okay, because honestly, I don't see anyone at this stage level offering the same level of the service that HALA is offering. So the policy push digitize SMEs, expand the credit supplies, right? And number two is a data advantage. So owning transactional payout data improves the underwriting and collections versus a pure play lenders. Okay, so they know the day-to-day transactions that the
Yeah.
SMEs are doing, which improves a lot by underwritings and collections, right? You know how much they are spending, you know how much they are income. You have all the data. You don't need to rely on any documents they submit. You have the data from the POS, from the POS, right? Okay. And I think one of the key reasons as well, the local mode, right? Like licensing, bank ties, and KSA specific product operations, like all of those made HALA and presented it as a key fintech in KSA that I'm sure that soon we're gonna see it expanding to other region, and that's why they gained they gained the trust of the investors to raise this amount of money.
Yeah, no, I mean, again, I'm sure we could talk about the SME space in KSA and globally, like, again, for a whole show. We have done probably, but I mean, yeah, just kudos again to the team at HALA for the raise. I think, as everyone has said, super exciting to see what they do next. I'm personally, as you've mentioned, Ahmad, like they've had some really great success to date. I think kind of creating those connected point of sale data to kind of lending products, I think focused, as far as I can see, on a slightly smaller ticket size, whereas I think some of the blurb around this raise suggests they might be looking to move more into kind of larger lending volumes to kind of really support business growth, not just sort of funding products, things like that. So I think that'll be really interesting to see if they can convey that success into the risk management, all that sort of side and that side. Anyway, we sadly have to take a quick pause here. We'll be back shortly. Okay, now for a quick look at one more newsworthy story this week that we don't have time to cover in full, but we think you'll find just as interesting. Fintech startup Chest set to launch new pension app that turns savings from everyday spending into future retirement funds. It's Pensions Awareness Week here in the UK, a timely reminder of how important it is to engage with our future finances. Thankfully, a growing number of fintechs are stepping up to ease the pension pressure and make planning for retirement simpler, smarter, and more accessible. Chest is a UK fintech startup launching a pension app aimed primarily at Gen Z and millennials. It lets users turn cash back from everyday spending plus automated savings into pension contributions. Research commissioned by Chest found many under 45s feel they can't afford pension contributions because of pressing short-term expenses, and many are anxious or uncertain about their retirement prospects. Gosh, I feel seen. Chest's modelling suggests that small, consistent savings, for example, £30 a month from cashback loyalty rewards, could translate to a substantial extra nest egg by retirement. To tell us more about the launch, we have a voice note from their CEO, Ali Adam.
Hey everyone, it's great to be on the podcast. My name's Ali, and my story is that I ignored my pension for over a decade and was completely shocked how little that I'd saved. So that's why we founded Chest, and that's to help young people not make the same mistakes that we did. The key problem is that paying 8% into a workplace pension, which is the default contribution, is nowhere near enough for most people. But even though many millennials and Gen Z want to save more into their pensions, the high cost of living with rent, bills, and basic living costs eating up their paychecks is really tough. So at Chess, we're building a new pension app for the younger generations to help them save more, making pension saving more accessible, connected to daily spending habits, and hopefully to make it a little more fun. Users will be able to earn cash back with leading brands and make automated savings through open banking. Our whole ethos here is to help them build their pension without sacrificing today. And this is all tracked through their Chess score, which is like a credit score for their pension.
Yeah, I'm really excited to see this in more detail when it launches. I have actually joined the waitlist for full disclosure. I just really want to have a nosy around when it launches. I think all around the world we have an impending later life crisis where people are living longer, but also holding far more individual responsibility for building their own retirement reserves as like those generous defined benefit type schemes of the past all but disappear. So we know objectively, I've heard firsthand from customers that getting people to start saving and investing in their 20s is key to realising the benefits of compounding. But this approach of trying to make this happen in the background and as just part of your everyday life feels so much more realistic to me. It kind of really feels like if they can make it work, if they can actually execute this, that it could be really, really powerful. We've seen how successful roundups and automations have been in the saving space. So yeah, I'm really hoping that they can nail the execution of this. So best of luck to Ali and the team. Okay. And finally, now time for something a little bit different from the world of business to finish this week's news show. This story comes from Newsround, which for international listeners is an amazing children's news show, but I used to watch a lot when I was not an old person. And that is Real Monopoly Money revealed by the Royal Mint. The Royal Mint in the UK is releasing a limited edition Monopoly-themed 50p coin to mark the 90th anniversary of the board game. The coin features iconic Monopoly elements, the Monopoly logo, Scotty Dog, race car, top hat, greenhouses, red hotels, the Monopoly man, and a community chest card. The coin is not entering general circulation. That's very upsetting to me. It's only available to buy in special collectors' packs. The silver coin starts at £15, while the gold version costs £1,730. Oh my days. Ahmad, are you a Monopoly fan? Have you played? Has Monopoly been a formative part of your life?
Yeah, like who didn't try it?
I'm not sure that I've ever participated in a Monopoly game that didn't end in tears.
Well, I always used to win if that will help. Yeah. So
it's bizarre. I'm a very competitive person. But actually, the thing I find really funny is to go into a Monopoly game with no intention of winning and just not deploy any strategy and just rampage around the board, buy whatever you like, refuse to build, refuse to sell, and just play to burn out completely. And every time I play this with my friends who are very competitive and love Monopoly, it just, shout out to my two best friends, Tanya and Ona in particular, who love Monopoly. It makes them literally get to the verge of tears because they're just so frustrated by my lack of passion for Monopoly.
I heard a story that is actually based on the genesis of the idea came about through Rockefeller and JPMorgan and their fight, I guess, for control, and how actually it's a reflection of capitalist society, and actually the chance card and the community chest card, those are real things, right? Which, irrespective of your strategy, something can make or break your fortune. So I thought that was quite interesting.
So, Kate, are you the team of Scotty Dog or Top Hat or the race car?
I quite like the Top Hat personally, but I know that each person, each their own. Dave, what's your kind of icon token of choice if you're playing? I feel like this will reveal a lot about a person.
I don't know if it's still there. The Iron was always where I went to, but Monopoly was always where the fights were when I grew up with my two brothers.
Echo that.
Yeah, we had to hide Monopoly though when my grandmother came around because she was a card carrying communist. So she wouldn't want to see it in the house.
Yeah. Well, believe it or not, Kate, sometimes like when we used to play, just me and my brother, okay, just two of us, and you know how Monopoly takes time. We used to leave the game going like for days and days, and like we carry the Monopoly as is and hide it under the bed, so the next day it can be as is, and so we can continue the game from where we stopped. It used to take us like 2-3 days to finish the one single game because it was just the two of us.
Yeah.
If I were your brother, I'd be going under the bed and taking a few of your red houses away.
Maybe.
Yeah, my brothers would have moved the houses.
I think, May, in the fact that I told you that I always win, you can know that who was doing that.
Wow, Fintech Insider ruining careers with Monopoly revelation. Gosh, no. I mean, obviously we don't dispel any kind of investment advice on this show, but May, what's your take on the ticket size of a gold version? £1,730. Are you going to be rushing to buy one?
No, I think it's a little bit excessive. Actually, I didn't know this thing was on. When you talked about it, I found it quite interesting because my little 6-year-old has started to lose some teeth, and I've been popping some coins under her pillow. And then when you said that there was going to be a 50p coin with like a top hat, I thought, oh, that's kind of cool. Until you said it was going to be £1,000 for the gold. So,
well, the silver is only £15, so a bargain.
£15. Yeah, maybe it's an investment. Maybe in lieu of a pension investment, I should be getting this one. That's a good point.
Okay, yeah, that's what I'll do. I'll convince myself I don't need to focus on my pension. I'll just buy a gold Monopoly coin instead, and hope it all works out.
Yeah, yes, and I think that's who they are targeting, and that's the idea behind launching the coin. Like, if, as May said, if you want to send something, and they are targeting, basically, I think they are targeting Gen Z with this. Okay, if you want to give something to someone like who plays Monopoly, instead of giving them like a birthday gift, you know what? Let's digitize it. Let's give them a coin. Let's give them a token, and see how this goes. Because like, and I think that's the idea, and that's how they are representing it. And if it's gonna become a success, if it's gonna become successful, I think that's what they are relying on.
Yeah, I mean, it is actually my friend Tony's birthday, like this week, who is obsessed with Monopoly. So this is making me just feel really bad that I've not got it for her as a gift, which I clearly should have done. So, damn it, maybe there's time. So, reading the notes, I was not aware of this, but apparently new tokens have been issued. So the boot, the wheelbarrow, and the thimble, not the thimble, I love the thimble, have all been retired.
Ooh.
And been replaced by a Tyrannosaurus Rex, a penguin, I can get on board with that, and a rubber ducky. Does it have to be ducky rather than a duck? I don't know why. So, final question to round us out. If we had to introduce a fintech-themed playing piece, what are we throwing into the mix, Dave? What's going to be your new Monopoly token?
Oh, is it going to be a credit card or your mobile phone? So you've got your app on there or something. I don't know.
Okay, May.
Oh, a tricky one. A token, probably. Digitized token or something like that.
Oh, I'm trying to work out what that would look like, but
yeah,
I like it's got sort of ethereal sort of
a Bitcoin symbol.
Yeah.
Oh, I don't want to say Bitcoin, but some sort of token.
Yeah. Ahmad, what about you?
I agree with May. I'll go with the token, definitely.
It's kind of hard, isn't it? Yeah. I mean, I don't know if I could come up with like a fintech token, but it'd be quite cool to see like a fintech monopoly board where, you buy different fintechs, which would be the equivalent of Mayfair. I guess it would have to be like a Stripe, right? And then you could have kind of the hierarchy of fintechs going around, and you buy, maybe, I don't know how you'd group them, pick which ones are in which colours, but that would be fun. Maybe someone's probably already done that. I suspect I'm probably not the first person to have that idea. Someone somewhere has done it. If not, maybe we should do it. I don't know. Okay, that wraps up today's Fintech Insider News. Thank you so much to today's guests. Where can people find out a bit more about you and your companies, Ahmad?
They can find more about me on my LinkedIn page, okay? And more about my company by visiting Thunes.com.
Excellent. May, what about you?
I'm on LinkedIn. I'm also on our Anthemis webpage. And there's also now a CommonAI webpage. So That's probably the more important one, given the topic of today's conversation.
Yeah, absolutely. Go check it out. And Dave, what about you?
Yeah, me via LinkedIn, and think about Foundry on foundry-os.com. Bigger picture stuff that what we're doing around there at 11fsholdings.com.
Brilliant. And as for me, you can find me on LinkedIn as well, or drop me an email, kate@11fs.com. Thank you so much for listening to today's Fintech Insider. If you like what you heard, please make sure to follow us on your favourite podcast platform. And if you really like what you've heard, why not share the podcast with a colleague or friend? As always, if you want to join the conversation, find us on social media. Just search for 11fs or Fintech Insider or email podcasts@11fs.com. Thanks again. Goodbye.
Ever wondered which UK bank or challenger has the best set of features? Well, thanks to 11FS Pulse, you don't need to wonder anymore. With its industry-first benchmarking feature, 11FS Pulse allows you to directly compare the holistic financial offering provided by traditional banks and digital challengers to see who is better serving their customers. Using Pulse's exclusive scoring metrics and jobs to be done methodology, dive deep into what makes each product stand out, from unique hero features to everyday banking necessities. And once you're done with benchmarking, there's another 17,000 hand-picked user journeys in Pulse's library for you and your product team to explore. Book your demo today at 11fs.com/Pulse.
In today's fast-changing digital world, proving your company is trustworthy isn't just important for growth, it's essential. And that's why Vanta is here. Vanta helps companies of all sizes get compliant fast and stay that way with industry-leading AI, automation, and continuous monitoring. So whether you're a startup tackling your first SOC 2 or ISO 27001 or an enterprise manager vendor risk, Vanta's trust management platform makes it quicker, easier, and more scalable. Vanta also helps you complete security questionnaires up to 5 times faster so you can win bigger deals sooner. The results? According to a recent IDC study, Vanta customers slash over $500,000 a year in costs and are 3 times more productive. Establishing trust isn't optional. Vanta makes it automatic. Visit vanta.com/insider to sign up for a free demo today. That's VANTA.com/insider.